If French wines became known for being sold in toxic bottles, then the sales would drop and the industry would be scrutinized. But since the bottlers want to keep their products at a high quality in order to keep up a long-running business, standards are typically kept to keep the industry afloat. But quality standards aren't as historically important to products' success in China as they would be for products in other countries. As the expectations for corporate responsibility are lower, companies have stuck to the bottom line. With the advent of social media, consumer safety has become an often discussed topic of concern. Several industries have seen their businesses hurt by a lack of consumer confidence, specifically in the food and beverage industry. China's rice wine industry, or baijiu industry, has been dealt two major setbacks in its sales. The first was when plasticizer was found in the rice wine drinks. The second has been the Chinese government's anti-corruption campaign at the end of last year. Baijiu was known as the choice drink for business and government gatherings. The prices and demand were high until the campaign. China's baijiu industry has struggled since then. Top baijiu brands such as Maotai and Wuliangye saw their stock prices decline with poor sales. Maotai had its worst semi-annual report of the year this past August. The company announced in 2012 that its sales target in 2013 would reach $8 billion. This is lower than in previous years. The company had to reduce its annual sales target rate to 15%. For China's baijiu companies, the plunging sales volume might not be the biggest difficulty. The real question is how to persuade consumers to buy their pricey and sometimes dangerous products in the next few years. As 21st Century Business Herald reports, during the past decade, China's baijiu industry saw a significant increase in both retail prices and sales volume. High-end baijiu contributed to over 50% of the net profits for the entire industry. Over 60% of them came from large-scale baijiu companies, such as Maotai and Wuliangye. The huge profit margins and the high demand allowed the prices to move higher up. Taking Maotai baijiu as an example, its retail price in 1980 was less than $1. It took a decade for them to double the price to 10 yuan. Then the next decade, its retail price from 10 to 100 yuan, or about 16 US dollars. From 2000 to 2010, Maotai's baijiu prices tripled to 300 yuan, or about 50 US dollars. Since then, the prices kept going up. From 2010 to 2012, its retail price increased to 2,000 yuan, or less than 330 US dollars. That means the price increased 600% in 3 years. The company was able to leverage its prices to create a brand image suiting a luxury good. By controlling a baijiu output at a stable level and by limiting the market supply, the company's baijiu products could come at higher prices than its counterparts. Meanwhile, the company also began putting up its aged baijiu products on speculative markets. It gave consumers the impression that Maotai baijiu was a valuable product for investment and collection. By creating a high-end brand image, Maotai baijiu's investors began hoarding a huge number of bottles so they could sit on the product until the prices increase. It's estimated that over 3 to 4 million crates of Maotai baijiu are being sold by individuals. The number being stored up is almost equal to that of the company's annual output. If adding the distributor's inventory, it's estimated the total inventory in the market would reach to 20,000 tons. That's almost equal to the company's 2-year production volume. Don't go away, because we'll continue to look at the fallback from baijiu scandals. Stay tuned.